What's up guys, welcome to Oz Wealth and welcome to another video. What a great day in the stock market today. Is it the beginning of the crash or what's going on in the stock market? Please let me know in the description below what you think. As you see here, we started the day kind of with a lot of optimism, but then the end of the day did not reflect what was going on at the beginning. Look at what's happening with the Dow Jones. We're down 0.5%. The S&P 500 we're down 1.3%. The Nasdaq, the biggest sell-off today for the second day in a row, 2.70, and the Russell down 1%. As for the sectors, energy, Exxon, and Chevron, and I own also Pembina, they were scoring some gains. American Express, Bank of America, JP Morgan, all of those financials also were scoring some gains. Industrials with Lind and the rest of the crew. The rest of the market was just in red. It was like an invasion of like a sweeping wave of red. Not sure if this is the beginning of the crash as everybody was talking about it. We're entering the month of March and all the fear and the skepticism about repeating what happened last year, but we all know that there is a stimulus check coming in the next coming days, in less than 2 weeks. So that should boost the market a little bit. It doesn't seem like it's helping though. So with all these factors combined, as you see here, consumer staples, materials down 1%, real estate down 1%, utility down also 1%, healthcare, consumer services, consumer discretionary. Tesla was just like crushed today. We'll talk about it in a minute. Information technology in general, Apple, Intel, and all the stocks that we own were just getting hammered today. As for my Robinhood portfolio, we're down, as you see here, for the day for 1.17%. For the week, we're down 3.58%. For the month, we're down almost 5.5%. For 3 months, we're up 5.29%. For the year, we're up 23% or 24%, and for overall, we're up almost 25%. As for my holding in my Robinhood portfolio, as you see here, we're down for the day for 1.17% at $61,815. As you see here, Tesla today is down 4.74% at $653. I'm not sure if Tesla is a good buy at the moment. Maybe we're gonna see more of a slide in Tesla to around like $500 or maybe lower. If you read in the news and you see the momentum at Tesla, if you research about what's going on in the market, I feel like we're heading to a crash. Look at Apple, 2.73%. We're back to the $120 mark and maybe lower. I'm not sure if Apple is a good buy at the moment. Maybe we should wait until Friday, see how the week is going to end, and make the move by Friday. Look at Intel is also down to 2.2%. The entire information technology sector is down. So, and those are the leaders. Arkk, we added today 5 more shares of Arkk at $124.20, although Arkk is down 6.82%. Arkk is down, if you check here, for the last 3 months, almost 14%, 16%. So I think it's very, very attractive number. I think we bought around this point here where it was actually we bought just before closing at $124. So I think it was a good buy since Arkk entered our portfolio at $139. So with buying Arkk at $124, we lowered our cost base to $132. Going back to the main dashboard, SPHD is flat today with a little gain of 77%. AT&T, this sleepy stock, is up today strangely 2% at $28.67. Realty income is up almost 1%. LTC is up 1.2%. Stag is down 1%. AGNC is down almost 1%. Maybe this is a time to shave AGNC. Maybe it's time to sell this guy and go heavily on, well, if I sell AGNC, that will give me at least one share of Tesla at the moment. So I'm not sure if it's a right move, but we'll see how things are going to go. Main Street Capital is up 2%, Johnson & Johnson at 1.84%. Bank of America and the financials in general, as you see here, they're all up 2.12%. American Express, Bank of America 2.79%. Caterpillar is down almost 1%. Coca-Cola down 0.32%. Philip Morris almost flat. Exxon and the energy, they keep just rallying, as you see, with a gain of 1% at $56.65. Pembina is up almost $5 during the day at $27. Con Edison up 0.5%, and Hermal Food is up 0.19%. As for the main purchase that we made for today, as I mentioned earlier, we made a purchase for 5 shares of Arkk, and if we go to the account and we go to history, and then we go down to the orders we placed for today, we bought 5 shares at Arkk at $125.20. 5 shares of Arkk at $125.20. And as you see, Arkk, we go back to how Arkk performed today and how it started at $132, and we ended the day at $125 with almost 7% of a loss. I'm a big believer in what Cathie Wood is doing, and this is such a wonderful ETF. For those who don't know what Arkk is, this is a collection of 50 stocks that they invest in 5 really adventurous, futurist sectors: the electric vehicles, 5G, genome, biotech, and artificial intelligence. I don't have any of those stocks in my portfolio, and having this ETF that will give me an exposure to the entire market that Cathie Wood investing in. If you see how this stock performed last year, and the gain that Cathie Wood was able to acquire is almost 130%, and for the last 5 years, they're up 627%. So I'm a big believer in this new companies that they are ahead of their time, and this is the a wonderful ETF that gives a sizable exposure to all these companies, combined with taking into account the risk that comes with it. So like for example, Arkk has a big chunk of their investment in CRISPR, and CRISPR today was almost down like 9%. So it was like a kind of a comparison between, should we go for a CRISPR which was on sale, such a sweet deal, or stick with our strategy, goes with investing with Arkk. That gives us the really nice diversification toward all those futuristic companies, instead of like concentrating the funds in one place, which makes it more of a riskier investment. So we're gonna stick with Arkk. We are a big believer in Arkk here in Oswell, and I think we're gonna go dollar cost average 5 shares every month until we get this ETF to 100 shares. Hopefully, like by the end of next year. As for the main dashboard of my entire portfolio in the investing world here at Simply Safe Dividend, you see right now we're standing at $78,376, and this is the combination of 3 accounts: the HSA, the Roth IRA, and the Robinhood portfolio, with the current annual income from dividends is $2,140. with the dividend growth 3.9, and the dividend yield is 2.73%. Going back to the Arkk ETF that we made a purchase for 5 shares today, if we type here ARKK, we go to the analytics. As you see here, Arkk Innovation ETF gives a dividend yield of 1.63%. Simply Safe Dividend website does not give any information about ETFs. They just use unrated, but when we're talking about ETFs, we're talking about like combination of multiple stocks, and Simply Safe Dividend sees them as safest, one of the safest investments in the market. Now, hopefully, Simply Safe Dividend will provide more information about how to break down the safety factor when it comes to ETFs, but for now, they're going with unrated. As you see here, the dividend growth for Arkk Innovation ETF is almost 1,000% for the last 2 years, which is incredible. It was the talk of the market, and that's what brought Cathie Wood to light and became very well known. The price today is $125.11 with the loss of 6.2% today. The beta volatility is 1.17, which is considered high, and we currently own $1,251 as a market value, and Arkk is 1.6% of our entire investing portfolio. We're down right now minus 5.7%, and we are going to get $20 every year as an annual income from Arkk itself. So this $20 is almost 1% of the entire dividend I receive from all the companies I'm investing with, and the yield on cost is 1.54%, and the total cost is $1,326. So as you see, we're down here, which reflects the loss that Arkk scored today at almost 6%. So we're losing in terms of like our strategy of investing in Arkk, but we don't worry about it here in Oswald because we know Arkk is going to recover soon, and we're long-term investors, and there's no worry about it at the moment. We're going through a very volatile market at the moment. Any small and minor loss here and there is not going to affect the overall strategy. We currently own 10 shares, and the cost per share, as you see here, is $132. Going back to the main dashboard, if we go to the diversification and we see how much each company pays me from dividend, AT&T is still taking the lead with almost 20% of the dividends come from AT&T, followed by realty income. SPHD, Exxon, we're expecting to get almost $50 next week, or it's next week from Exxon. The Schwab S&P 500 index funds comes number 5. Main Street Capital comes next. Pembina 4.6%, Apple 3.8% when it comes to dividend. This company doesn't pay dividend. It's a growth company, but as you see here, Apple is one of the top 10 companies that pays me dividend in my portfolio. AGNC 3.6, Stag 3.4. When it comes to the sectors, as you see here, the loss Tesla had today brought Tesla back to the second place at 24%, and Apple and Intel is taking the lead again at 25% of my portfolio. So it's been back and forth between those two sectors, between Tesla and Apple. The strategy right now is just watching the market cautiously, and based on that, we're going to make our strategy. Apple is still on the radar. Tesla is still on the radar. We'll see how Friday is going to end, and by the end of Friday, we have to make a move to take advantage of this unusual and unprecedented time. People call it dip, people call it the beginning of the crash, and other people call it maybe we're entering recession. We don't know. Funds are moving from the saving toward the brokerage account, whether it's Robinhood or Charles Schwab or even the HSA. We're building our decisions in the next 48 hours. We're living in a very unusual time. So please, guys, be careful and do your own research, do your own due diligence before making any move here. Again, I'm not a financial advisor, and you have to do your own research. Please let me know what's your strategy for this week. Are you waiting for the market to dip lower? What do you think is going to happen around the stimulus check time, which is, I think, March 14th? Are we going to see more of a sell-off? And people are really afraid as we go toward March 23rd, which marks the lowest point the market reached last year in the middle of Rona situation. So please let me know in the description below what you think, and appreciate your thought, and appreciate your support to the channel.
That's it, guys, for this week. If you have not signed up to Robinhood yet, links are in the description below. You can get a free stock from Robinhood. It's a win-win deal, and if you have not smashed the like button, please do so. You can kick it, hit it, smack it, do something to it. It will mean a lot to me, and if you like the content of this channel in general, please consider subscribing and hit the notification bell. And until next time, you guys take care.